Hello and welcome to the NetPicks channel. My name is Eric, and today we're going to be discussing using debit spreads in the context of movement in a certain price range. Today we're looking at the triple Qs, and the date is July 14th. As you can tell from this chart, on a 4-hour chart that we're looking at, we've seen since the middle of May this level set up here, in which 700 was support, and we saw a move higher up to about 750. And by the second week in July, we came down to 685 area, so below 700, and then promptly moved back up again. And as you can tell from this chart, we've been ranging ever since and building this wedge. And so today we're going to be talking about using a debit spread and taking advantage of this slope down, but also using this base inside of this wedge. And so when we look at it, at the options that are available to us, if we head over to the trade tab for the triple Qs, and we look at the monthly expiration, which is July 17th, if we were to look at using just a straight call or put, as we can tell, they're trading at about $6 at the money, and so about $620 per contract. Now that might be a little bit rich and more than we want to put on the line for the size of our account. And so in this demonstration, we're going to show how using a debit spread can dramatically reduce your costs and afford you the ability to weather volatility. So if we switch this strategy to vertical, come back and look at the chart and say, well, I think we're probably going to trade in this range from 718, 720, maybe down lower towards 712 or so, and we want to express that opinion through a trade using a debit spread. We would come over here and find a strike that's close to where we are trading. So right now we're trading at about 719. So if we selected the strike just below that and clicked on it with our debit spread, wherein we'd be buying the 718 and selling, say, the 715, it'd be a $3 wide spread. All of a sudden our costs go from about $600 down to about $110, as you can tell here. And so at $110 per contract, we can easily get into a trade expressing our view that we think price is going to move lower over the next few days, at least until expiration, which is this Friday, today being Tuesday. And if we wanted to put that trade on, as you can tell, we'd be able to do so at a dramatically reduced cost. Now this bodes well in scenarios where we're trading, as we can see here, within this range, and we want to be able to express that we think, given this wedge, that price is going to probably move back towards this lower area until it is ready to break out or break down. And so debit spreads can afford you the ability to put a trade on, expressing your view without having a lot invested in the trade and limiting your exposure, because the most that we can lose on any particular debit spread is the amount that we pay for the spread. So if I get into this spread for, say, $1, the most that I could lose is $100 for this particular spread. If we want to express the opposite of that view of price moving higher instead of lower, so to the top of this wedge, we would be able to come over here and do the same thing on the opposite side and purchase a call debit spread and change our strikes so that it represents where we think price might move up through. We're currently trading at 719. If we think that price is going to move up here above 720 into the 722 range, then we could set up our spread by buying the 719 call and selling the 721. We'd pay about $110 right now as a debit. This would expire in 3 days, and if we saw price move up anywhere towards 720 to 721, then our debit spread would become valuable and we could turn around and sell it in very short order. Since this is a very liquid market, the triple Qs, this is a great way for you to put trades on intraday and or over the next several days or even weeks, you can use this to take advantage of what you see happening when you see formations like we have here, where we can see that clearly a base has been built and that this wedge has been trading tighter and tighter and coiling until we actually break out or break down one way or another. Hope this helps and gives you some ideas about trading. If you'd like more information about how to utilize these strategies, click on the link below and we will help you in utilizing debit spreads as a strategy.